Hey fellow traders, and welcome back to Market Analysis with Richard from NGT. In today's video, we will be discussing candlestick patterns, trend continuation patterns, and what most traders miss in their analysis. So without further ado, let's begin. Today's demonstration will be done on the New Zealand USD, Aussie USD, and the USD yen. There are candlestick patterns that continue to get me out of bad trades early and into good trades. Now, first we're going to start off with the false break candlestick. When a false break candlestick is formed, it is because investors are changing directions. What's unique about the false break is every time a false break is created, a divergence is formed on the lower time frame. Now, if you want to learn more on divergence, check out our other videos. I do demonstrate one inside of there, so make sure you go check it out. Now let's go over a live demonstration of a false break bar. Alright, now here we are on the New Zealand USD, and it is creating a false break right here. And I will show you right now how to catch this move. Now add the horizontal line to your chart. In order to identify false break bars, you have to know how to identify support and resistance. So if you want to learn more on that also, we also do have another video on support and resistance. Make sure you know what support and resistance is. Now, if you already know, just continue watching. In order to have a false break, it has to break through a support or resistance, one of the other. So as you can see right here, currently on market price, this is a support, bounced off the support, came back down to the support zone, bounced off, and then it came down and broke through the support. Investors right here are trying to catch the breakout traders. Anybody who flips open their chart, does not complete their due diligence, and then sadly sells this, and they will be very unhappy. Okay, so once it breaks through and pulls back up above the support, this is a confirmed move now. So I know that this is a false break. Now, if the next candle that opens, which would be this one right here, the open candle currently, takes out the low of the false break bar, this is no longer considered a false break bar. But what happened here is it did not take out the low. I'm going to put this line at the low of the current candle, and as you can see, it did not take out the low. So that means that this is still a false break. So the market may look pretty drastic, it may look pretty bad for the buyer side, but what's happening right now is they are changing their direction. Investors, that's what they are doing, and they are trapping the traders inside of trades here. Now, another thing to keep in mind, as I mentioned before, when every single time you have a false break bar, a divergence follows. Okay, so as you can see right here, we have a divergence. The market is telling us that what the indicator is showing us is not true. The indicator shows us that this is higher than down here, when in reality, that's not true. This is lower. The price level right here is lower, as you can see. And it claims that this is what's actually happening. So you have a divergence here. This is a very, very important step in your trading to understand and learn. And if you want to learn more on this and other videos that we have, check out our website at NGT TradersGroup.com. You will find a lot of critical information, and we only give you the information that you need. So make sure you check us out. Alright, now trend continuation patterns are so crucial because sometimes we miss an entry, but that doesn't mean we have to miss the trade. A trend continuation pattern is just a pullback of the trend. Let's go over some live examples of this. Here we are on the Aussie USD, and what we are looking at currently is a upwards move. I want your eyes on this move and this move only. Okay? Now, as you can see, this is a really strong up move. So if you were to miss the trade down here and it goes up and gives you the first pullback, all I would do is wait for the pullback, because I will be very skeptical to get in somewhere up here because I would believe it is much too far away. So all I have to do is add a trend line on the first bar of the pullback and add it on the highs of the bars in the pullback and wait until the high of that bar is taken out, and then right here I would enter a trade and I would be in to make a good 160 pips. So just to recap, once the market goes up and pulls back, wait for the pullback to finish and then proceed to wait until the bar takes out the high of the last bar in the pullback, and then there is the trade setup. So here's another example on the USD yen. The market is going up, 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 and it pulls back. Now I have to emphasize here, the market does not move in one direction. It always makes pullbacks. So as you can see right here, it made a pullback, pullback, pullback. This is a major pullback. I would say a pullback of more than at least 2 bars in order for this to be considered a pullback that I would enter into, that I would get into. So same protocol. Once you see this pullback right here, add line. Once the high is taken out of the last pullback bar, is actually on this bar, you would enter and you would be in to make 600 pips. Just off of this simple system, it does not take any indicators. It does not require much knowledge about the market. If you enjoyed this video, make sure to drop a like and a comment and share this video on your social media. I hope you enjoyed this video, and I hope to see you in our next